Welcome everyone to this week's edition of Where Is Your Stop? It is February 25th, 2015. Hope you all didn't miss us too much last week, but in our hawking perspective, we ended up talking about these correlations or these potential correlations from 1899 to 2014, and we can't go back that far, at least not in quality data to be able to show you visually. But figured to go back to the last major bubble that every history book talks about, and that's leading up to the Great Depression. So wanted to basically see, hey, how do you handle those markets? Were they acting or reacting any different than what we're dealing with now? And so let's dive right in as always. And so what we did was, as you can see, it's 1928 here. And we had just ended up with a little bit of a trend here, in a nice bull market, and then all of a sudden, some weak hands got shook out, and then bam, ended up getting a signal to go right back. And so boom, we went right back in, and obviously stayed outside the noise. And then sure enough, we ended up going into this essentially what we like to call impulse phase, and something that's not too unfamiliar with what we're seeing right now in the markets. And then obviously we go sideways here for a little bit, and then bam, we start to be able to track a little bit better data in here, and we can see that market's volatility on the upside is matched on the downside, and then bam, you go right back up, and this is how, even though it's 1928, we're still seeing that reacting to volatility and staying outside that noise allows us to stay in the game and capture those long-term trends. And so we see this then sideways price action, finally this last blow off, and then boom, last blow off top, until bam, we come right down into here. Now, obviously, into here, it's still the roaring 20s. Nobody knew what was about to happen, but then things caught up, and of course, that bubble burst. And so we see that the band cannot get above this last point of supply, and essentially we break down, and we break down very, very quickly, and as the headlines that everybody is essentially used to. So, and how that essentially relates to today, well, you never know what's going to happen. We could be in a bubble, we could not, but what we do know is that you have to give something a chance to run in order to be able to have that great big bull market, and which means that you got to be willing to give up a little bit of those profits and do what nobody else can. So here's to staying outside the noise. Here's to beating random, guys. Love the questions that came in this week on essentially what was going on in 1899. Look forward to any other ones that come your way. Maybe next week we'll be talking about Valentine's Day and how and a few stocks that apply there and what's going on there in terms of belated matters. So look forward to talking with you guys next week as always.